analyst at CFC Seymour, and joins us now from our studios in Hong Kong. Thanks for joining us this morning, Stephen. Why don't we start by talking about the carry trade? What's the outlook for the carry trade at this stage?
Well, I think looking at the carry trade, we have to look at it that it will continue, and especially with Japan. And of course, they held rates yesterday, which nobody's really focusing on. But we expect them to hold rates for the rest of the year, and that normalization of rates is going to take longer and longer for them to do, and there's even some in the market thinking that they might cut rates. So with that in the picture, we still look for the overall carry trade to remain, so we do not look for very much appreciation in the Japanese yen for this year.
Stephen, the Fed's 75 basis point cut overnight took a lot of people by surprise because they had thought that we would see that happening at the FOMC meeting next week. Given that they've done that already, what do you expect to see next week then?
Well, next week the market's expecting 80% chance that they're going to cut by 50 basis points, but we think that they'll cut by 25 basis points, and we think that they'll continue to cut for the first half of the year. And so with that background, like next week, we really have to focus on. There's so much information coming up next week. We have the State of the Union speech on Monday, and then we have the GDP numbers coming out, and of course the Fed meeting, and as well we have the job numbers coming out. So we're going to have more of a reflection as to, are we in recession or are we not in recession, or just how bad are things right now in the fourth quarter. So we do not think that we'll see a 50 basis points cut. We think that we'll get it 25 next week.
Stephen, it's Rebecca again in Europe. What about the Eurozone? We've certainly seen some of the European finance ministers quite optimistic about the outlook for the European economy. What does that mean for interest rates, and what does it mean for the FX markets rather here?
Well, when you're looking at the euro, I think what we have to look at is the ECB is not in a position where they can cut rates right now, because inflation is at 3.1%, and they really can't cut rates until they can prove that growth is slowing, and that is going to have an effect on inflation, and that is not the case right now. But we do look for the ECB to cut rates towards the second half of the year. So what I look with the euro is that it will appreciate against the U.S. with the interest rate differentials widening towards the first half of the year, and we'll hit over 150 at some point, maybe 152, up in that range. But in the second half of the year, we expect to see the U.S. dollar to rebound, and as the ECB tends to, or moves to cutting rates. So look for the euro to hit 152, but by the end of the year it will hit where it is today in the 145, 146 range.
Hey Stephen, it's Maura again. About 30 seconds left. Real quick, Aussie dollar with the data out today. Will the RBA hike, and is that good news for the dollar? Aussie dollar, that is.
Yeah, I'm still pushing that they will hike 3.8 versus 2 to 3 target. That's a very high inflation rate. So despite some saying that they won't hike, I think that Aussies will continue, and we'll see RBA hike. And we saw Swan be a little bit hawkish today in his speech today. So look for a hike in the RBA next week.
Thanks, Stephen. That was Stephen Rowles, who's analyst at CFC Seymour, joining us today. Well, coming up, the Fed's 70